Hey everyone, I'm Val. In today's video, I'm sharing how I trade gold and some tips I've discovered that make it a very attractive asset. I usually trade Nasdaq, but when the price action gets choppy or doesn't offer clean setups, I switch to gold. Let's dive in. Here's what I've noticed trading gold versus Nasdaq. In general, gold is less volatile. The moves are smoother and more stable. A small move on gold can equal a big move on Nasdaq in terms of money. I use the same ICT setups on both and they work. But gold often gives cleaner moves without those big wicks you see on Nasdaq, so we can use it in our favor. Let me break down the difference in tick and point values. On gold, 1 point equals 10 ticks, and each tick is worth $10. If you are trading micro gold, each tick is $1. On Nasdaq, 1 point equals 4 ticks, and each tick is worth $5. For micro Nasdaq, each tick is just 50 cents. In terms of money, here's a quick example. 8 points on mini gold is the same as 40 points on mini Nasdaq, and both are $800. Meanwhile, 8 points on micro gold is like 40 points on micro Nasdaq, and both give you $80. Now, let's talk about correlation between gold and other assets. And this is important because when we understand the correlation between assets, we can spot divergences and get more confirmation before entering a trade. And this is what ICT calls SMT. If you are not familiar with this concept or want to dive deeper, I leave a link in the description below to the specific lecture where ICT explains it. Gold and silver are typically positively correlated, and some traders use SMT between them for confirmation. However, based on my own experience, I've noticed that they are not always in sync, especially on the intraday level. So SMT doesn't really help for my setups. As we can see here, silver above and gold below, both on the 1-hour chart. Over a long period of time, these metals might move in the same general direction. But if we look at intraday price action, like in this example, they are clearly not in sync. That's why I don't trust SMT between gold and silver. In my experience, it just adds confusion. Gold and Nasdaq are typically inversely correlated, and from my own experience, they often move in opposite directions. So when one goes up, the other one in general goes down and vice versa. It's not always like this, but it can help us refine our directional bias. As we can see here, we have Nasdaq above and gold below, both on the 1-hour chart, and over a long period of time, it's clear that they are often inversely correlated. If we zoom in on the intraday price action, like in this example, it becomes even more clear. Here Nasdaq going up and gold going down. Of course, we can't rely on this alone, but it gives us an extra confirmation when framing our setups. Now, let me show you 3 examples of trades I took on gold. Okay, this is gold, 1-hour chart. Just to give a bit of context first, this was my first trade live on gold. Okay, let's see what we have here. We have a 1-hour FVG. I marked the consequent encroachment as an important level here. We also have a change in the state of delivery in the 1 hour. And we can see here that we have sell-side liquidity sweep in the 1 hour, in the 4 hour, and also in the daily. So, in the higher time frame, I was bullish. Now, we are on the 15-minute chart. I've marked a 15-minute FVG, which overlaps with the 1-hour FVG that we've just saw. And we can also see a retest of the 1-hour change in the state of delivery right here. Now we zoom into the 1-minute chart, and after 10 a.m., price rallies up, taps the low of the 1-hour FVG here, forms a 1-minute order block, and then trades right into the 15-minute FVG. Here we go on the 1-minute chart. Price chopped around this area inside this 15-minute FVG for almost half an hour, then retrace it back into this 1-minute order block, and at this point, I was ready to frame my trade idea. I was expecting price to break this level and form a 1-minute change in the state of delivery, and that would be my entry point. The trade setup is here. We have 6.6 points to target, 3.9 points risk, and 1.69 risk-reward ratio. For reference, 6.6 points on mini gold is equivalent to 33 points on mini Nasdaq, and this is $660. So we can see here that even with a small move, gold can give us a nice reward. Okay, now let's see how the idea played out. Here we have another example. This is gold 1-minute chart. Price is trading inside the upper portion of this daily volume imbalance, which is all this shaded area. I've marked 3 reference points to frame the next trade idea. This is the 9 a.m. 1-hour candle that has just closed. It traded down up to the 50% of the previous candle's wick, rejected from it and closed inside the range. That's a clear bullish sign to me. This is the 6 a.m. 4-hour candle. It traded down into this fair value gap, rejected from it, and also closed inside the range. This fair value gap also aligns with the 30-minute rejection block here, and we also have a 1-minute fair value gap. Price traded up, came back to retest it and rejected from it again. So all time frames are showing bullish signs. That's why I'm expecting higher prices from here. Half an hour later, price came back and retested the 1-minute fair value gap, then traded higher, still respecting the same key levels. At this point, I can frame my trade idea. Price swept minor buy-side liquidity up here. It also inverted this 1-minute fair value gap. And right here, we can see a change in the state of delivery, forming 1-minute order block. I'm expecting price to retrace slightly into this area. So here is my entry point, aiming for this buy-side liquidity up here. The stop loss would go below the lower portion of the order block, since I'm not expecting price to trade below this level. If it does, I would consider the trade idea invalid. This trade is 6.3 points to target, 3 points risk, and 2.1 risk-reward ratio. For reference, 6.3 points in mini gold equals 31.5 points in mini Nasdaq, and this gives us $630. Let's see how the idea played out. Here's another example. This is gold 15-minute chart. I've marked these key reference points from the higher time frames. This level is the 50% of a weekly wick. Here, price took out buy-side liquidity. You can see it in the 1-hour chart and also in the 4-hour chart, even though this 4-hour candle hasn't closed yet at this point because it was 9 a.m. What else can we see here? Okay, we have sell-side liquidity resting below this level, overlapping with London low, and with this new wick opening up. We can also see that after sweeping buy-side liquidity at this level, price formed a 15-minute change in the state of delivery right here, overlapping with this breaker block in the same time frame. So, based on all this analysis, I was bearish. Now, let's drop to the 2-minute chart. At this point, I was ready to frame my next trade idea. I was waiting for price to retest this level, which is the 15-minute change in the state of delivery. The stop loss was here at the breaker block's high. I was aiming for the sell side liquidity resting below London low, which also overlaps with this new wick opening up. This trade was 23.6 points to target, 5 points risk, and 4.72 risk-reward ratio. For reference, 23.6 points on gold are equivalent to 118 points on Nasdaq, and this gives you $2,360. Let's see how the idea played out. I hope this video was helpful and gave you another perspective on trading opportunities. If it did, hit the like button and subscribe for more. Thanks for watching and see you in the next one.